This is Mike Swanson. You're listening to the Wall Street Window podcast. I've got a very special guest with me today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. Well, how are you doing today, Dave?
Pretty good. How are you, Mike?
Okay. Well, I mean, we've seen the news of this coronavirus all the past week, and every day it's so far becoming more and more news, more and more numbers of people dying in China. But today, it seems like it's now making the U.S. stock market sick. I mean, on Friday, a lot of stocks went up, but today, almost everything is down. So what's your diagnosis for the stock market now?
Well, I think, first of all, we've talked about in the past, we were extremely overbought. And one thing that started to worry me is I was watching over the weekend a lot of the interviews from Davos. And, the guys I'm watching, the people I'm watching being interviewed are very smart individuals like, Paul Tudor Jones and Drunken Miller and, people who have great backgrounds and track records. But the thing about it was, what started to worry me is every single one of them was bullish, no matter, what, even with this huge run in the market. Now, that's like Paul Tudor Jones even was calling for some small corrections, but they were basically just saying, oh, the market's going to keep going higher. And I was like, that kind of happened in the January 2018, run up during Davos. That I think it was the guy who's I'm having a brain freeze, but the guy who has the largest hedge fund in the world. He basically said, you don't want to own cash and all this sort of thing. And of course, that ended up being a good intermediate term top, which really lasted until the middle of last year, middle of 2019, almost an 18-month top, right? So,
I think you're talking about Ray Dalio, I think, right?
Yeah. So he said that, and even he was another one that was bullish. So it started to worry me a bit because there's a couple factors here. In terms of, the coronavirus being an excuse to sell. I do think there's the problem. You're going to get some problems in the Asian economies. I remember SARS in 2003 because, where I'm from in Toronto was the hardest hit city or area outside of Asia back then. I think actually Toronto was the only city that had deaths from SARS outside of Asia. So anyhow, and I remember, it did slow things down and actually kind of led to, if you go look at it, there was a third retest of the lows that spring, and that SARS sell-off was a bit of a part of the reason behind that, because there was a short-term slow up of growth in the global economy. So I think you're going to see that. When you got whole cities in China quarantined, and of course China is now much bigger than 2003, and it's the second largest economy in the world. That's going to cause some problems, especially like for some of the casino stocks, because with some cities in lockdown, that means people aren't going to be going to Macau. And this is the time of year in China. This is their new year, right? This is the time of year that the people would be traveling and doing all these things, right? And now it doesn't look like any of that is, or a lot of that is not going to happen, right? So I think that's something we have to take into account economically. But again, and it also kind of worried me too was, seems to be this prevailing thought that, the Fed is just going to keep loose until the election, which I think will happen, but that, everything can be propped up into the election because Trump's going to do whatever he can to get reelected. Well, the problem with that was when I started looking at, some of these charts like Moody's and Apple and TDG and, all these kind of companies that are going like kind of parabolic. I was just looking at it and it really reminded me of 99, 2000. I was just like, and looking at the rate of ascent of those technical charts, I was just like, I don't know if this can really last another 9 months or 12 months because, when you're talking, these stocks are kind of doubling every, 12 to 18 months, with the kind of, like I said, the rate of ascent they're having. It's like, is TDG going to be $1,000 in 6 months? Is Moody's going to be $400 in 6 months? It's just really hard to see that with how much they've gone up,
Well, I think, we last spoke about 2 weeks ago on a podcast, And at that time, the stock market, hadn't this hadn't hit the news. The stock market hadn't started dropping, but it was the opposite. The stock market was going straight up, and I was worried that, and I not that I necessarily thought it was going to happen, but I thought the real danger would have been if the stock market continued to go up the rest of this month. Then it would be like 2018 in January. It'd be so overbought and so extreme that it would. I think that's how you would get a really dangerous top. For example, I look at something called a rate of change indicator. It's over a 12-day period. When the stock market, the S&P I'm speaking of, goes up more than 5%, during, after already going up for months, then it tends to stall out suddenly like it did in January 2018. So this kind of makes that danger go away. In other words, instead of being a very significant top that might last all year or even be the end of the bull market, we now have this. So in a certain sense, for the long run, I think it makes the stock market less risky, but it has to play out the drop here.
Well, like the thing about that is, yeah. See, another thing too that I've mentioned to you that because we did really start going almost like not parabolic in the market on the S&P. The S&P just had a strong run, but we were going up so much so fast on the S&P.
Yeah.
It kind of reminds me of, again, if you look at 29 and 87, what happened is you had a first quarter top and then these kind of consolidations into the spring and then the final move in the summer. So maybe this virus is an excuse, for one of these corrections to occur before that final move higher. And because there are some warning signs, like one thing I didn't notice until just the last few weeks was actually last few days, I should say, was if you go look at the Dow transports, they actually did not make a new high on this move. They are still below their October 2018 high. So if you believe in the Dow theory, it's actually a non-confirmation, because the industrials have been making new highs for months and months now. So that could be, and by the way, that doesn't mean the market's going to top tomorrow. If you go look at 99, 2000, the transports actually got killed from about the summer of 99 into March of 2000. And of course, the market went up for months and months, afterwards. So that doesn't have to mean the market's going to top tomorrow. But again, if we were to see one more move higher or whatever it may be, that failing of the transports to confirm the new high might actually be a sign that, we're probably topping out here sometime soon. And I should notice too, let's say for argument's sake, this was the top here in January. Well, I don't think it's going to be like, just straight down and then, and in 6 months the Dow is going to be at 20,000. I think what would probably happen is, you would have some kind of correction and then you'd have a rally. And if you go look at 2000 and 2007, I'm not saying the same thing's going to happen again, but really you had these multi-month double tops occur, right? You had, October 2007, the S&P really made a double top with its summer high. And August of 2000, the market really made a double top with its March high. So it's like that could happen too. You could get a correction here, then kind of maybe a final move higher. And that final move higher, again, would probably happen. A lot of these stocks I'm talking about that went parabolic, maybe a lot of those stocks probably wouldn't make new highs. And you would see a lot of non-confirmations then on any kind of top like that. So that looks to me, like you said, because the market did stop its extreme rate of ascent this past month or last few days. So that probably would be the kind of top you would see, some kind of correction, then a move higher, and then maybe the market begins to roll over. And there's one thing actually I'd like to note too about when I watch these interviews with Tudor Jones and Druckenmiller. One thing I have to say, and it's always tough to disagree with these successful billionaire hedge fund managers, but one where I kind of disagreed with them was that what they were saying was, they thought the market would continue to be juiced and then, the Fed would raise interest rates, right? Well, I don't think they're going to raise interest rates. And if you go look at Japan in the last 20 or 25 years, there's been many, 40, 50% corrections in the Japanese stock market, followed by 100, 200% rallies, with virtually their rates staying at zero. So I don't think we have to see rate increases to occur for the market to sell off. Now, that did happen in 2018, but what I'm trying to say is when you're in this kind of this new monetary environment of maybe these permanent kind of zero rates, and you've seen that in Europe too, by the way. Like if you go look at Italy since the financial crisis, their market has been in and out of bear and bull markets numerous times. And, again, the European central banks had rates at zero for that almost the entire period. So I just think when you're in this, again, you're kind of in this new environment of zero or near zero rates. That means that you're going to have these bull and bear moves with really rates not going up or down on the short end.
Well, one thing about that macro environment that you're talking about with interest rates and Federal Reserve policy is over the past 2 years, I would say the primary beneficiary of that has been gold. I know the stock market went up last year, but the GDX gold stock ETF went up 38% when the S&P 500 went up about 27%. So, gold and gold stocks have done very well. However, that said, this year we saw gold go above 1,600 at the beginning of the year when that Iran stuff happened and come down. And today, it's up, but the gold stocks are just down a little bit. So what do you think is happening with gold?
Well, I think with the gold stocks, I think what the problem is, again, like pointing out those kind of hedge fund managers, what I find interesting about them is those are guys who actually are bullish on gold. Actually, all three of Dalio, Tudor Jones, and Druckenmiller are all bullish on gold, and they've said this in the past. But again, you're talking about institutional money, and I think the problem is when you're getting this blow-off or big bull move in the stock market, none of that institutional money has flowed into gold, even if people may own some bullion or something. I mean the gold equities, because they're doing so well in being in the FANG stocks or being in certain sectors or whatever it may be. They didn't really have to do a strategic move into the gold stocks. And I think you see that on a day like today. Okay, we're correcting a bit, but there's still been no big move into the gold stocks. And at some point, that's going to happen. So that's why I'm not really seeing the gold stocks, they're leading the metal. They're saying there's not going to be a rally. I don't think that's really the case here because we just need some institutional money to really kind of flow into them. And yeah, and I told you this off air many times the last few weeks when the market was blowing off. I was saying just exactly what you said. I was like, if gold is this strong and holding up this well when the market is having this huge move higher, just imagine what gold and precious metals are going to do when there's actually a correction in the stock market. And we're seeing that today with the Dow down 300 to 400 points. We're seeing, a gold up about $10. So I think that too, if we do get, say, a 5 or 10% correction here, regardless if it's the start of a bear market or if it's just a correction before maybe one final surge higher, I think that during that correction, it's going to be even more apparent that the Federal Reserve is not going to do anything and become probably even more dovish. And I think gold will do even better during that correction. So, and I think at some point here, we're still kind of like, if you go look at the highs of mid last year, we've taken them out a bit. I think it was about 1560, but we haven't really significantly broke them throughout. But I think if we go through 1600, that is a significant breakout. And that's when you can start going to 17, 18, 1900 at some point. And which, of course, if you went to 1900, you basically would be at near the all-time highs in 2011. So I definitely think that if this is the start of some kind of correction in the markets, or at least the start of a period of volatility, the gold will continue to get a bid as well. And like, we're also seeing, I think we are seeing maybe the global geopolitical economy thing kind of break down too. We obviously have this virus in China that we've discussed. And then also on top of that, the U.S. embassy in Iraq got attacked. And there was it looks like a U.S. plane got shot down over Afghanistan, which I don't think we're going to have another all-out war in those areas, but could lead to like more tensions, more bombings back and forth between various parties. And that, again, should be good for precious metals as that kind of uncertainty unfolds again on the geopolitical kind of landscape.
Well, both of us have positions in various gold mining stocks, big cap ones and small ones. And I know you've got a new one that you're eyeing that as a potential investment or trade. So what's happening there?
Yeah, well, look at first of all, just to get back to what we're talking about with these stocks, like, okay, we've had a company called Aftermath, a silver mine, a silver play, do very well, and it's consolidating right now, but that's a company that's really gone up, and then and that's got a resource, and it was a formerly producing mine, and then another one called African Gold. I've just got back into that, and that's the same thing. That's going to be like a near term. That's a production kind of story. But the thing about all these plays is that they tend to be just one or two properties, right? They tend to be, and all the newer gold plays that have traded like IPOs, they always tend to be, a couple of properties here and there. And the thing that makes this new one that I have really unique is that this has got the potential to be a mid-tier company. And I just mentioned institutional money earlier. Well, the thing is, when the Wall Street guys are looking to fund a deal or fund an IPO, they're not going to be looking for these little juniors that trade, at 50 cents or 30 cents on the venture or CSE. They're going to be looking for larger companies with land holdings, multiple properties. So this one that I'm talking about here is called Nevada King. It used to be called Casino Gold, and Nevada King is already the fifth or sixth largest landholder in Nevada. And by the time they go public, which should, I think, be between 6 to 12 months from now, I think they may be the second or third largest holding, because they're going to use the funds that they're raising to probably take over more properties. So this company has the chance to, boom, just become a mid-tier, just like that. And because there's so few of these smaller mining companies that are in a position to become mid-tiers and a position to have larger market caps and get larger amounts of money from, say, Wall Street instead of Bay Street in Canada, I think that makes this a really unique opportunity to. And then, of course, the other larger landowners, like say like Newmont, it becomes like almost like a takeover target down the line too, from a company that's really operating in Nevada. So this company is going to be raising money at around 70 cents pre-IPO, which will give it roughly, about a $30 million market cap. And I think, because of the amount of properties it has, this is a thing that could, trade way north, of 100 million when it comes public, if you get the combination of acquiring these properties and, say, gold being at 1800, if and when it comes public. So that's one I really like right now. And on top of that, with the deal, what they do is the Nevada King also owns a position in something called Victory Metals, which trades under the symbol VMX. And what they're going to do is spin off that Victory holding into a company that's kind of going to be like a fund called Palisade Capital. So you'll also get shares in Palisade when they spin that into Palisade, that Victory holding. So you're going to get shares in two deals as well. So this is kind of what I really like about this as well. And just so you know, in terms of disclosure, I actually helped facilitate the sale of one of Nevada King's properties. It's called the Atlanta Mine. It was owned by Meadow Bay Resources, which is a marijuana company is being rolled into Meadow Bay. But I helped was one of the parties to help facilitate that sale. So I also have a vested interest in the company too. And obviously too, actually, when we were looking to sell that Meadow Bay property, I was looking for the right vehicle or right company to get it. And I figured that Nevada King was actually way better than just some company that was just going to be like a one property junior, like I just mentioned. So, and the long story short, the reason I think this one makes this one so unique, and I like all the financings that we've done. But what I really love about this one is the ability that this could go maybe straight to an American listing. It could be a NASDAQ or NYSE listed company, or go right to the Toronto Stock Exchange, not just the TSX Venture, because its ability to potentially be a mid-tier right from the start.
No, that's incredible. Well, for anyone that's interested in it, I suggest they contact you. Just email you, addicted to profits at hotmail.
I should be doing. Oh, sorry to interrupt. I should be doing an interview with the chairman shortly. I don't have the papers for the private placement yet, but that I think this week. So basically by the end of the month, let's say, I should get those. And I don't think it's going to be open that long. They're going to look to close this tranche pretty quickly, because I think they want to use that money again like I said, to acquire more properties, etc. So, definitely, like you said, contact me at addictedtoprofits@hotmail.com, and or just contact Mike and he'll forward you the email to me, and then hopefully we'll get this thing will start in the not too distant future.
Well, great. And anyone wants more information from you too, check out your website, addictedtoprofits.net. And thanks for taking the time to talk to me and everyone else.
Yeah, thanks.